Ken, what's your level of optimism or pessimism as we begin 2019?
Over the top. Barbara's more articulate than I am, but I'm a big believer in the V here and now. I think last year, and particularly December, was driven by the most underreported story extant, which was hundreds of hedge funds forcing against each other, stampeding to close by year end. That story hasn't really been told. And then as that pattern drove stocks down in the middle of every day, you soon got short sellers trying to anticipate that, all of which got squoze on the 6th. But I think the V will be very strong, and there's some simple rules of life that negative years are followed by positive years unless there's a global recession. Small negative years and big negative years don't make much difference. When you have a year like last year where both stocks and bonds underperform cash, you get double-digit returns. I'm pretty much over-the-top optimistic, although as a qualifier, and people that know me know this, I tend to be more optimistic than not most of the time.
I guess, Ken, those hedge funds didn't just decide to go out of business and race for the cash by the end of the year. A lot of their stocks got killed. The crowded positions were decimated starting in September or October, and largely that was because of people ratcheting down growth expectations or exposures to spots around the world that were slowing. So obviously there was something behind it besides the mechanics of liquidation, wasn't there?
We kind of disagree, Mike. Let me just kind of take you through that. Hundreds had announced that they would liquidate and close by year end. What they didn't anticipate was that they would all be stampeding against each other. And starting the second week in December, you got almost daily patterns where the market got bombed starting the middle of the morning sometime. And that was all selling for speed over price. That's very unusual, and those steep drops get followed by steep, similarly, not identical, but similarly steep ascents, which is that V. But I do not believe once they announced they were closing to their shareholders, they had to close. They had to raise the cash. They had to liquidate, and speed over price became operative. And once you got into the middle of December, they're doing that day after day after day after day, rushing to liquidate. That story has not been told. In fact, next week when I'm invited back, I would love to tell that story in detail.
Well, you seem to have told it pretty well right this time, but we will talk to you again for sure. Meanwhile, we do want to mention President Trump making some fresh comments earlier today about the volatility that we've seen in the stock market.
Our country's doing better by far than any other country in the world from an economic standpoint. We're the talk of the world. And we had a little glitch in the stock market last month, but it's still up, I guess, around 30% from the time I got elected. And it's going to go up once we settle trade issues. And once a couple of other things happen, it's going to go up. It's got a long way to go.
So, Barbara, we can't deny the market is up. It's up like 26%, the Dow is, since the election. But is it a market primed for celebrating something like progress on China at this point, or will it use that as another excuse not to celebrate? We've seen a few of those as well.
I think it's a good question because, first off, the word glitch is very interesting because I actually do agree with that it was a temporary, that it was a correction. And I think it tells us something important about President Trump's mindset, though, that this
the worst month for stocks since 2009 is a glitch?
Well, meaning that I think it's a correction. That's what I think. No, a glitch, I laughed.
It was not just
I laughed when I heard
data
that.
error or something like that. Right.
No, I laughed. But what I think it tells us something very important about his mindset. We know the stock market performance has always been important to the president, and I think what he needs to do now, given his political challenges and his legal challenges, some 16, 17 investigations, he needs a win. And China will be a win. So I think he has more incentive right now than China does, even with their economic issues, to come out with a big trade agreement with China.
And the market will applaud that?
The market will definitely applaud that. There's that and earnings. When earnings come in, if they're not a disaster, if they're actually pretty good, which they should be, in my view, I think the market could be primed. Maybe we do have that V that Ken just talked about. But I think we're primed for a big upside surprise on the China trade.
Ken, what impact would that have on earnings and the market, and how much is that baked into your view that we're going to get some sort of a deal with China?
It's not baked into my view at all. Fundamentally, as I've articulated all throughout 2018, that whole trade tariff talk is making mountains out of molehills. The actual GDP impact at the maximum tariffs it could possibly be are a single-digit percentage of 1 year's GDP growth. They're too minuscule to really matter, and people can't get that out of their mind because they're still fixated on this notion of tariffs having caused the Great Depression in the 1930s. This is making mountains out of molehills, and I don't think it'll make much difference one way or the other. That doesn't have anything to do with my otherwise over-the-top optimism.